I want to thank you so much for joining us on what is really a special edition of our webinars here at HFA. I'm Mark Schumacher, I'm the CEO, and this is exciting because there's one thing that in the conversations I've had with retailers over the last number of years that continually comes up. It has been the cost and affordability of healthcare. We want our staffs to be covered, but we also don't want it to put us out of business. And so we have been listening here. The HFA team has been, and we have been working for quite some time to come up with the HFA healthcare solution. But we start that today with this presentation to really give you an idea about what is out there and whether or not you and your team will qualify for really some great potential savings. So this is an exciting time for us, and it's great for us to be able to come to you with solutions like this. Joining me here today is Tyler Davis. Tyler is with Decisely Insurance Services, and Decisely is a solution partner for HFA, and they have partnered with us in this endeavor. And Tyler, I just want to mention, there's the bearded and the non-bearded. This is great. We get you looking both ways here. But I have to tell you, it's interesting. We have all of these questions that people have given us in advance, and we'll get to a lot of Q&A later in this broadcast. But it's interesting that, boy, the words that are just the most common are cost, affordability, and options. And so I know you're going to be addressing all of those three things today, so I'm just not going to stand in the way much longer. But just to let everybody know, we're recording this. This will be available if you want to share this later on. And of course, if you have questions, we have the chat on the right side of the screen. Please put them in there. We'll try to get to as many questions as we can after Tyler makes his presentation. But Tyler, thank you so much for joining us, and take it away.
Thanks, Mark. Yeah, it's a pleasure to be here and spend some time with you guys today, going over healthcare and the struggle that is driving our entire country. And so it's very complex. Hopefully we can shed some light on it. My background is about 15 years of consulting experience in various ways in various companies. So the picture on your screen is straight out of college. Worked for Anthem, Blue Cross and Blue Shield in the public exchange markets, and then went to a private exchange, trying to help small businesses with their health insurance on a one-by-one basis. And the last 15 years have been a whirlwind with the implementation of the Affordable Care Act and Obamacare to trying to arbitrage and the system, because it's the system that will go through, it's fixed. One thing we're seeing with healthcare costs rising faster than inflation, it's affecting everybody. And so it's very important, hot topic. And hopefully we'll try to demystify some of that for you today. As Mark mentioned, we've been working with HFA for about 6 months to a year, setting up this program. So we've done a lot of due diligence on the HFA membership, as well as what your needs are, what you're looking for. Hopefully we can address some of that, and very excited to be rolling this out. It's been about a year's worth of work. So if you are in the presentation, please ask a lot of questions. We'll have the chat open, and hopefully we'll get a lot of interest, a lot of information out to you. So let's go ahead and get started. Quick agenda for this call. We're going to go over a quick overview of Decisely, who we are, how we help associations and franchise systems, and then we'll talk about HFA healthcare in the marketplace, what products are available, and really our mantra, which is no member left behind. And I think what you'll see is a lot of variety, a lot of different unique products. And we'll talk through those things and then go through the next steps as well as Q&A. So we will go ahead and kick it off. All right, so who's Decisely? So Decisely, I've been here about 3.5 years. This is my second startup. We're based in Atlanta, Georgia, offices in Salt Lake City as well as Sacramento, so a national presence. But we're a small town broker feel. We specialize in small businesses. We are an InsurTech startup. What that means is we are part insurance broker, part insurance consultant. And so we work with a ton of different small businesses of various sizes, as well as we are a technology player. So that's part of the InsurTech piece. The technology that you'll see is very important when we look at streamlining the administration of the insurance you're offering. How are you doing that? Making sure you're compliant. And so some of the technology we'll walk through as well. And then we are growing by leaps and bounds. So we've tripled and quadrupled the last couple of years, and our success has been mainly delivering quality and affordable solutions to small businesses in this country. And so we are owned by 2 private equity companies, Oak Hill Capital as well as 2 Sigma. And so we're proud to be a B Corp as well. We'll talk about what a B Corp means. Our mission statement is small businesses, the lifeblood of this country. And there's about 35, 40 million of them. And what you'll see is less than half offer health insurance, mostly because it's too complex or it's too confusing. So we'll walk through how we're really addressing that. We have various programs and products in this marketplace to address you and your business, your family, and we designed it to fit as many of the needs of HFA members as possible. So you'll see captives, you'll see direct primary care, you'll see individual insurance, you'll see small group, you'll see level funded plans. We are licensed in all 50 states. We have thousands of clients, and we've been around 6-7 years now. And so growing like crazy. Some of the clients we work with, so HFA has been about a year's worth of work for myself and Mark and Jordan and the team here. So we're excited to finally be rolling something out. But we do this aggregation or group purchasing programs for a lot of other associations and franchise systems, whether it's Amazon or Napa or various trade associations. And so we are the program manager as well as the broker, and we'll go through kind of what that means on the next couple slides. All right, so what we do here at Decisely, we can do benchmarking and carrier procurement, paperless eDoc management. This is, to be honest, compliance is a big deal. Making sure you're compliant, making sure you're doing the right things, and a lot of it is trying to get you away from paper. Chasing paper is not a very efficient way to run a business. And so the more that we can document electronically, store on employees' records, make sure it is filed and reportable for you is important. So we'll talk a little bit about that. Employee communication materials, as well as benefits administration. When you offer insurance, you have to have a really efficient way of getting the employees enrolled, you enrolled, your family enrolled, as well as getting that information to the insurance carriers in a timely fashion. So a lot of time savings in HR we've been able to accomplish for members over the years. And then HR support. So we've had a lot of questions from employee handbooks to the onboarding process to recruiting. What we try to do is provide you with a recruit to retire system. So it's vertically integrated where all the different systems that you have to manage talk to each other. And so you can go from recruiting and sending someone an offer letter to then them going in and onboarding, completing their I-9, E-Verify, W-2 withholdings, direct deposits, to enrolling in their insurance, maybe enrolling in their retirement plan or 401k, all the way through processing that with payroll. So you'll see a truly integrated end-to-end solution that's very cost effective and simple. We are a proud B Corp. Most individuals don't know what a B Corp was. I know I didn't before I got here 3.5 years ago. A B Corp is a for-profit company with a social mission of doing good. And so every 3 years, we have to get certified by a nonprofit B Lab, and we're held to higher standards of accountability. And so our mission statement is small businesses. We have a 1% pledge. We are eco-friendly. We have charitable contributions. There's a lot of things that we hold dear, and they're more altruistic in nature. Part of that is helping you and the small business in this country be able to afford and access healthcare. And we'll talk to you a little bit about how the system is somewhat fragmented, to say the least. Some of the other B Corp members that we are friends with, Patagonia, Ben & Jerry's, Casper, we're very proud of the B Corp status. How we kind of, the genesis for how we kind of spawned is there was a need in the marketplace, and that need was small businesses, specifically less than 100 employees, really not having the service or the focus or the attention from the insurance brokers that are out there. A lot of insurance brokers are looking for larger groups. That is that's how their margins operate. Whereas we focus on small groups. The traditional broker model is not very high touch. They need to go after larger groups, whereas we're utilizing technology as well as our scalability to really service small groups. And you'll see kind of why that's important. We've met small groups that are current clients that previously weren't even getting their insurance shopped each year. But not even that, they weren't going to the alternative markets and looking at ingenious ways of delivering insurance at a lower cost and layering different types of coverages. So there's for us, small businesses is our bread and butter, and for too long it's been neglected from an insurance and broker standpoint, and so we're here to make that change and to help. So that's been the traditional broker model. We respond to really help small businesses when it comes to our expertise as well as the delivery of healthcare. Our model is built upon service. So while the technology is super easy, super simple, which should help you, especially small business owners that are typically wearing multiple hats. The owner is the marketer, is the CFO, is the salesperson, is the service person. So the more that we can offload, the more efficient you'll run your business, and it shows. We do Net Promoter Score and get customer satisfaction surveys all the time. Our Net Promoter Score is very, very high. We also get tons of testimonials and case studies and some great feedback from our clients. And so the Net Promoter Score being this high and our retention being about 95%, 94%, it just shows that what we're doing is actually making a truly impactful difference on the lives of our clients and their employees. There's a very, very tight labor market right now, as you guys are probably aware. What you'll see today is full-time products, part-time products, independent contractor, 1099, sole proprietor products. Again, we want no HFA member left behind. And so we've developed a marketplace with various products that are going to be deployed depending upon your needs. And so it's a very consultative and customizable approach based on what you're looking for among various other factors. So let's talk a little bit about HFA healthcare. So marketplace customized to each HFA member. And we'll try to slip in here some of the what I call secret sauce of how the healthcare system is somewhat rigged against us. And so we'll try to weave that in here as we go through this. But as I mentioned, we do a lot of due diligence, and we focus on what do HFA members need. The fact is, as many surveys as we've done, which is probably 40, 45 different enterprise surveys and thousands of responses, the same two trends start to emerge and bubble to the top. One is, a lot of small businesses, 60% don't offer benefits of any kind. Secondly, 50% of the employees who are surveyed would resign their job for better benefits. And so we're seeing a huge labor shortage in the market right now. And so anything that we can do or you can do or offer that helps to recruit those employees and retain your current employees is overall going to be productive to the business and help you run your business. And so we'll walk through different ways of how we can structure that and really kind of show you a long-term glide path over a couple of years of controlling costs, delivering value to your employees, and then ultimately increasing productivity of your business. And so what's going on? Challenges facing the status quo. The healthcare system is rigged. So we said that before, right? It's rigged because a lot of the insurance carriers control the supply chain, right? And so traditional insurance has been around, probably, it's evolved, but look at 20, 30 years, insurance has not changed very much, right? Even though it represents about 25% of our GDP, right? So it's driving, healthcare costs are driving everyone crazy. There's got to be a better way of delivering that. So there's a huge affordability. A lot of times you get a renewal increase if you're currently offering insurance, and you have to raise the deductible or lower the amount that the company is contributing and increase the cost on the employee. Besides those two things, there's not much things that are being done to control healthcare costs. Healthcare is not expensive, guys. Health insurance is expensive, okay? There's a lot of fat in the healthcare system, and there's ways of trimming that fat and improving access to care as well as cost long-term. But the Affordable Care Act, which was rolled out in 2010, March 23rd, 2010, it's about 26,000 pages long. I read most of it. And what it really did is it didn't really control healthcare costs. it really regulated health insurance and how you can deliver it. And there's really four factors driving healthcare costs. There's end of life care, beginning of life care, chronic conditions, and pharmacy. Pharmacy should represent about 20% of your overall healthcare costs. If it's more than 20%, we should talk. There's ways of deleveraging that and finding alternative ways to drive down those costs. But pharmacy is a huge driver of cost. Those four factors wrapped around the Affordable Care Act has increased costs dramatically. For instance, fully insured, there's an 8% load in the fully insured rates that you guys are receiving strictly due to taxes and fees from the Affordable Care Act. Okay, so it really taxed an industry, a consolidated industry, a limited competition. It wasn't all bad. There's some good things that the Affordable Care Act did, which is, provide essential health benefits, provide minimum actuarial values, give insurance guaranteed issue to individuals in this country that otherwise couldn't get it. Right, so remove pre-X's. It made preventative care free. Right, so now that you have insurance, you can go to your doctor for your physical, and as long as they code it as preventative, right, it should be free. So there's some good things, but these are challenges on top of increasing costs, in various other ways. And so there's only one other industry. In fact, maybe this is a good time to pause. Let's do a quick survey. Type your answer into the questions box. There's only one other industry where their cost of that industry has risen faster than healthcare costs. So healthcare cost is faster than inflation. There's one other industry that is outpacing healthcare. You guys want to take a guess? Type your questions into the chat. See which industry do you think is outpacing healthcare inflation, healthcare costs? Anyone want to take a guess and type your question into the chat?
Okay, I have one on the sidebar here. What about education?
Yep, that's first one's correct. Look at that. College tuition is the only other industry that's outpacing healthcare costs. And so what this does is it puts a huge burden on your war for talent, recruiting, on your bottom line, your budget. And so yes, we have to figure out a way to make this more accessible as well as make it more affordable. So that's been the challenge. How do you solve this? Well, when we were sourcing this and looking at various products and vendors and carriers, and said, well, what about a marketplace? A marketplace provides unique products that still give aggregated discounts based on being a member of HFA, but also allow us to customize specifically for smaller members or larger members, right? And so our mantra is no HFA member left behind. What you'll see on the marketplace is a solution from A to Z, and a lot of alternative solutions that traditional brokers aren't focusing on. And quite honestly, something's going to happen, right? Push comes to shove. We have to think about delivering healthcare a little bit differently. And there's a lot of great carriers and insurance vendors that are doing that. And so you'll see recruiting and onboarding, right? So how do we, help save money and time in HR? To group benefits and telemedicine. Telemedicine had a huge surge over the last year with the pandemic. And telemedicine is largely an inexpensive cost, $3 or $4 a month, and can provide huge value and ROI, keeping someone productive and healthy. Individual insurance and indemnity policies. The individual marketplace is still out there. There's been an extended open enrollment period pretty much this whole year. And so if you have an individual policy, we should probably talk. If you have a business, there's ways of running that individual insurance through your business called an ICHRA, ICHRA, which we'll talk about, that allows it to be a tax write-off for the business as well as pre-tax to the employees for their contribution. But ICHRAs in the individual market, we are expecting a huge increase this year, mainly from the adverse selection that is happening right now. When we at Anthem Blue Cross, when I was working there and we're rolling out the Affordable Care Act and Obamacare and healthcare.gov, the whole idea around having a open enrollment period was to limit adverse selection. People jumping in the plan, using the benefits, having a major surgery, and then dropping the plan next month. Well, unfortunately, what we've seen this year is The open enrollment period, which is traditionally from November to December, has now been from November, December, January, February, March, April, May, June, July, probably through the end of this year. So we are expecting adverse selection and individual costs to go up, but it could make sense depending upon average wages, what you're looking for, how much your budget is. So individual options are certainly out there. HR services and compliance, there's a lot of, depending upon your size, employer mandates if you're over 50, but also, there are compliance issues around setting up your Section 125. Make sure you can take pre-tax deductions, make sure you have a wrap document, make sure you have an employee handbook. There's, even if you're, that 2 to 50 size employer, there's certain things you need to do. Business insurance and retirement programs. Retirement is a huge, another challenge in this country. As much as we can lead a horse to water, we can't make that horse drink it. So what I will tell you is that the retirement transformation is coming. There are certain states and or municipalities, largely now on the West Coast, California, Washington, Oregon, it's coming east. But there are certain states and municipalities who require businesses of all sizes to offer some sort of retirement program, even if it's voluntary. And so what you'll see is, aggregated 401ks as well as IRAs, really low cost options to keep you compliant and deliver some value to the employees. So traditional health insurance, we've found success in this, guys. Believe it or not, our technology of how we quote this is very, very efficient. So, personally, I've spent years building products for clients, and we think we have the product nailed down. We think it's going to be a hot seller, and for whatever reason, a traditional quote off of the market is going to beat that in some instances. And it is an access to the information as well as an efficient way of quoting it. So traditional insurance, we can absolutely do. We use it as benchmarking and procurement data. We can use your information, quote all the different carriers in your market that are available to you in a matter of 30 seconds. So we have what we called an API or automatic feed from a carrier, from a vendor that aggregates all of the insurance carriers onto one platform, and then we quote it. And so that's our sniff test. So the first thing when you go in, and we'll show you how to do this, you go in and submit your information, say, hey, I need some, just see if I'm competitive, or see if you can save me money, or see if you can improve access for our employees, or maybe at part-time. We're going to be able to quote the market in a matter of seconds, and that's really the first step of developing a holistic strategy for you and coming back with various options and then deploying those options. So medical, fully insured, level funded, self-funded, dental, vision, life insurance, we're going to be able to do that in an instant. So very, very quick from a quoting standpoint. And then we have alternative, products. These are products and vendors that aren't necessarily offered by traditional brokers for one reason or another. The insurance industry has needed change for a long time, not just on the insurer side, but also on the broker side. And so as costs continue to escalate, we're seeing the need for new carriers, new ways of delivering it. And, we do have captives available. Captive carriers are groups of employers that have banded together to reduce healthcare costs. So that could be an option. We also have group medical ancillary, as well as accessible care options. And accessible care coverage is really interesting. It's been an emerging trend. Amazon just rolled it out. It's called, one of the things called Amazon Care, right? Accessible care is, think of it like Netflix for healthcare. So it's a monthly service. It's call it $50 a month, and you can go get a set list of services done at the doctors around you. Accessible care is basic coverage for basic needs. It's not going to cover your catastrophic options. But you can solve for that. There's different products that you can fit together to really cover your out-of-pocket max, as well as provide better access. The access is important, specifically when you look at controlling costs long-term. You would be surprised at the barrier for an employee or an individual to go to the doctor is a $40 copay or an $80 urgent care copay, right? And they're not going to the doctor, they're putting it off, they're delaying care. That leads to episodic and huge costs down the line. And so there's a philosophy in healthcare: if you can improve and engage your population, more proactively, you can control costs long-term more efficiently, right? And so there's some accessible care coverage options, different carriers, as well as different vendors that we use. And again, think of Netflix for healthcare, flat monthly costs for a set list of services. We've had huge success with this, especially in the medium to low wage, average per hour wage earners, at least providing them something. Heck, we've even had some part-time employee populations that the employer said, you know what, this is I'm gonna pay 100% of this. We have 100 full-time, and 50 part-time, and the part-times aren't eligible for our medical, but I look at the hourly wage what we're paying part-times. This equates to about a 50 cents per hour wage increase, guys. So if you can increase, your retention, not have to go out and hire as many people and then graduate a part-time person to maybe a full-time position, and you can do that in various stages in a really cost-effective way of maybe $50 a month, that equates to 50 cents per hour pay raise. Maybe there's an ROI there, right? That you don't have to go out and replace someone every time they leave. So we've seen this on full-time as well as the part-time population. And then telemedicine, individual and RX discounts. Pharmacy is a nightmare. There's no reason why drugs should be so expensive other than the fact that a pharmacy manufacturer has a brand exclusivity policy. So I don't know if you knew this, but when a pharmacy company comes out with a brand drug, they get 7 years of brand exclusivity, meaning no one can create a generic equivalent for 7 years. And they substantiate that, some of this could be valid, but they substantiate that with R&D, research and development, and the cost of bringing that drug to the market and going through the FDA and getting it approved. But pharmacy is largely not expensive. There are programs that we can source drugs from Mexico or Canada or other ways that really lower the cost for you as a company as well as the employee. Case in point, there are manufacturer's assistance programs, guys, and if your employees qualify, they can get oftentimes very discounted drugs for free, as well as maybe as less as a $5 copay. So there are programs that you can deploy within this marketplace that allow you to control costs long term, provide more transparency, and a better user experience at the end of the day. So pharmacy is going to continue to be a huge driver. If you're out there in a captive currently, or you're out there as a large employer and you're getting some data, you may see your pharmacy. Make sure your pharmacy is right around 20% of your overall cost. If it's more than that, we should take a look at it, figure out what risk mitigation programs we can deploy to control that. Oftentimes you can do it very easily. Captives, so future state, captives and self-insuring. If you guys look at the winners and losers of last year, last year was a very revealing year. If there's anything positive coming from the pandemic, it is the fact that the insurance carriers kind of had a spotlight on them. And I'll tell you what I mean by that. The spotlight is last year, not very many people went to the doctor because of the pandemic. And so carriers really focus on what's called medical loss ratio. And that is the amount of premiums they've collected versus the claims that they paid out. We saw medical loss ratios for clients last year of 40, 50, 60%, 70% loss ratio. In a normal wear and tear year, that is phenomenal. You're looking at a flat renewal or a decrease. Yet we saw carriers come back with 10, 20, 30% renewal increases. And the math just didn't make sense. You go back to the carriers and say, wait a second, they have a 50% loss ratio. You banked 50% of the premium so that you wouldn't have to increase the premiums next year, right? But as much as you talk, it doesn't make sense. The numbers weren't adding up, right? And so part of this is actually revealing, right? So the real winners of last year, the groups that were level funded or self-funded, had great claims and loss ratios and kept more of their money. The losers last year were the fully insured, groups where you don't get any data, you don't know really how you're running, you don't know what's driving your costs. No, by the way, here's another renewal increase of 10, 12, 15%, even though we banked 50% of your premium, right? As my 6-year-old would say, Daddy, that's not right. And I would say, yeah, the world's not fair. time to grow up, son, right? You're 6. But in reality is, guys, it's wicked cruel, and captives and level funding and self-funding are going to get more and more traction because it allows you to keep more and more of your money. Instead of insurance carrier stock prices going up and the executives getting bonus and your renewal increase going up, you keep more of your premiums and you become more in control of that. So captives could be a future state. Again, when we work with employers for HFA healthcare, we want to get to know you. We want to get to know your employees, what you're looking for, and then put you on a 3 to 5 year kind of glide path. The first year might be to get something. Second year might be to start to look at captives. Third year might be, what else can we sweeten the pot with? And so when we sweeten the pot, we want to be holistic. The strategy here is not just medical. It's, what do our employees want and need? And it could be alternatives. It could be, we just put in a roadside assistance programs. We had a client in Idaho or Wyoming that their employees were driving, 30, 40 miles a day to the office as they're going back to work from the pandemic, and some were, having car issues. And so there's really alternative, low price, huge value that you can deliver as benefits, either voluntary, meaning 100% employee paid, or company paid, 100% company paid. So we'd like to holistically look at your benefits portfolio, make sure it's delivering the value for you to help recruit, retain your employees. And there could be alternatives, and not just medical, dental, vision, but medical, dental, vision, life insurance, disability, gap policies. One of the things I preach when we're doing open enrollment meetings for employees is, hey, we got to look at layering coverages, guys. So not only do you, if you're going to enroll in a higher deductible health plan because of the cost, well, maybe try to put some of those savings into a health savings account to pay for medical services when you incur them, or look at a gap policy. I can tell you, I am in my whole family. I have 3 kids under the age of 6, and we've made money on my accident policy every year. It's $40 a month, I think $37 a month for me and my family, and it pays us a fixed amount of money. And I promise I'm not going around pushing down my kids, but I mean, they're animals, hurt, and so it helps, man. When you go to the doctor, you have to have something to help offset the high cost of that doctor's office and some of those diagnostics that you're getting. So look at layering coverages. Accident coverage is a great way to do that. And then direct primary care, the subscription model is huge. It's going to continue to grow. Accessible care solution, these are just 3 vendors we threw on a page for you to look at, but $49 a month. You get telemedicine, you get primary urgent care for free, you get RX discounts. There's no out-of-network specialist. There's no limited indemnity. It's available in all 50 states. So this is just a screenshot of one example, right, where we're tackling the access to care, the cost component, and maybe there's a bigger holistic picture that we look at and a strategy we look at, but the accessible care solutions continue to grow. Remember right now, guys, the insurance carriers control the supply chain. When they control the supply chain, when you get a negotiated discount from your doctor because you're with Blue Cross or with Aetna, with Cigna, remember that negotiated discount has already been inflated, right? And that's part of the problem. Everyone is basing their reimbursements off Medicare. Medicare is the biggest payer in this country. It's got millions and millions. You're on Medicare, everyone bases reimbursements off of Medicare. So it's Medicare plus 160% margin for the doctors. But it shouldn't be Medicare plus 4,000% margin or 5,000% margin. And that's the issue. That's the problem. There's very little transparency. And so when we start to look at these programs, we start to get away from, what is the negotiated discount to maybe it's a cash payment. You guys would be surprised if you go to the doctor, you ask, well, what's the cash payment instead of running it through my insurance? Try it. We got to be good consumers. Consumerism is just like buying a car. You're going to test drive a car. Go in and ask what the doctors are charging. I've done it before, and it's a somewhat, it could be an uncomfortable conversation, but I've saved money. I've actually was on a high deductible health plan 5 or 6 years, 4 or 5 years ago, and my firstborn child was at the Braves Stadium, tripped and fell. It was $1,400 to get 6 stitches, 6. And I said, well, what's the cash price? Don't run it through the insurance. I'll just pay you cash right now. It's $350, so 75% discount from just paying cash. So, there are opportunities for programs that are structured just like that. And what we're seeing in long-term trends, those programs are typically performing better versus traditional, oh, let's switch from Blue Cross to Aetna, or Cigna to Kaiser, or Kaiser to Blue Cross, or Humana to, Aetna. That game is just going to continue to spiral out of control. Costs are going to continue to go up. And so there are ways of looking at that, making sure, for instance, you're not getting charged $1,000 for a toothbrush. We recently, so part of us at Decisely, we're your advocate. So not only do we have this technology, but we're your employees. Your employees are going to call us. We'll have a client service manager for yourself, but the employees are going to be able to call us for advocacy. So meaning, please help me understand my escalation of benefits, my EOB, right? Or help me understand this SBC. I'm not sure if I'm choosing the right plan or not. Summary benefits of coverage and this whole education process has been convoluted over the last 10, 15 years, somewhat intentional. But what we do is make sure you're getting charged fair and reasonable prices for the services that are being rendered. We've seen a toothbrush for $1,050 on a hospital bill. We've seen a $525 Tylenol tablet, a $350 pillow. So I would encourage you to be consumers, look at your bills, especially hospital bills, see what the actual charge is. Right now, it's tougher to get than you would think, and a lot of people don't do it. We do it for you. That's part of our technology, part of our savings opportunities. So we have tons of case studies, testimonials, and clients references you guys can talk to. These are just 6. Most recently, 6 groups, various sizes, 34 enrolled, 15 enrolled, 9, 4, 19, 11. Total cost savings, $258,000. This is from on the front end, looking at their insurance, making sure they're getting charged fair premiums, but also on the back end, making sure you're not getting charged $1,050 for a toothbrush, right? So averaging 35% cost savings over the renewal rate on this one. I would say our average is 23%. We're averaging between 20 and 30% cost savings, depending upon the products that we're deploying for our members. Captive case study. I just actually, this is about 2 months old, but I just had a client that moved to a captive, and they're getting $9,000 back a quarter from their pharmacy benefit manager. There's huge rebates in pharmacy, guys, that a lot of you guys probably maybe aren't aware of, but this client is about 50 enrolled, and they are getting $36,000 a year, a check, back from the pharmacy benefit manager based on rebates that are available. And if they were fully insured, guess who keeps those rebates? The insurance carriers, right? Not you. And so again, start to peel back some of the layers of excess and waste and fraud and abuse in the healthcare system. A lot of ways to help you save money, and that's what we intend to do. This was an interesting one. They moved from fully insured Aetna to this captive. At the end of the year, they ran at about a 65–70% loss ratio. They ended up having $157,000 in their claims account. That would have been money that they would have paid to Aetna or to Cigna or to Blue Cross or to a different carrier. Now they're keeping that money and they're rolling that into next year and lowering their overall cost. Okay, so there are a lot of different ways to curb cost. What's next? So I just want to wrap up here in the next 5 minutes or so. And so if you're interested, we went over a lot. I mean, we could talk about this forever, and it takes more of a one-on-one consultation. So here's what we're encouraging all the members to do. If you're on this webinar, if you're interested in learning more, please go to myhfa.org/healthcare/healthcare. It's right down there in yellow, myhfa.org/healthcare, and click Get Started. And that will start our process of getting you assigned a consultant. It might be me, it might be someone on my team, to really reach out and do some fact finding, spend about 15–20 minutes on the call, understand what you're looking for, get the minimum data we need to provide you a proposal of the various options. And then, from there, there might be some things that you want to tell us, like, number of employees, where you're located, your phone number, do you currently offer insurance? What are you looking for? Improve access or improving cost? These are things that go into the consultative process of us using our technology and our solutions, but also working with you to make sure we hit the nail on the head of what's important to you and your employees. So once you put that in, put your information. Do you use a payroll vendor? Do you have an HR system? Do you currently offer insurance? Once you hit submit, okay, you hit submit, someone from Decisive will be reaching out, scheduling a call, introductory call to learn more about you guys. And then we go through, give us about a week. Once you submit all the information that we need, we put a proposal together with various options for your full-time, your part-time, your contract workers, and do forecasting and budgeting and show you, how much is available to contribute versus what employees would have to spend versus the actual benefits that you're getting. So this proposal could have some, HR services. If you're doing paper, we offer a free HR system, so there's no cost of the HR technology. It's free, guys. So it's a huge value add. We actually built our HR technology for Chick-fil-A, one of our largest clients, about 4 or 5 years ago. They kept saying, we got chicken coming from the truck. It's got to get into the fryer to the customer as fast as possible. We can't have multiple systems for uniform ordering to recruiting to onboarding to insurance, and so what we did is that was one of the genesis behind us building our vertically integrated HR system that does recruiting, uniform ordering, anything you wanted to do. We even can take any paper documents that you have, turn it electronic. So think of a DocuSign or a HelloSign type of product. We built our own. It's called Decisive Signature Services. So if you got an employer handbook, if you got an employee handbook, you got any documents that you need employees to sign, we take it, we turn it electronic, and then it's electronically signed and time-stamped and put on their employee record. So huge savings from that standpoint. And then some of the additional features, we do a lot of different things, from reporting to, we try to cast a wide net, but then drill down and really make it customizable to you guys. So myhfa.org, healthcare is the site. Put your information in. Would love to schedule an intro call with myself and the team, learn more about you guys and what you're looking for. But it is about 42 minutes after the hour. I want to make sure that in time.
You did great. You got to take a deep breath. That was a lot of stuff, but no, this is, I got to tell you, Tyler, I know a lot about this process and what we got going here, but I'm looking at these at these notes I'm taking here, and I'd like to just before you go any further, there's a couple of these I just want to highlight here. First of all, I just think for me one of the greatest selling points is you said that you figured the average cost savings is 23% is what you looked at, and kind of balancing this out.
Yeah, if you look at our entire block, and we have 5,000 plus clients now. Our entire block is averaging about 23% cost savings compared to what you're currently doing today, without watering down the benefits. So that's the other thing. A lot of people can save you money.
That's yeah.
But not many people can do it without watering down the benefits.
And a little bit more, one of the things that you just touched on with the HR technology too. So this one platform that you've got here up on the screen right now, this one easy to use platform. So is this something that as a business owner, this is a question that's come in here, that does the business owner have to utilize everything on this platform? Does it integrate with what they already have? Just make sure you kind of clarify the differences there for people. It'd be great.
Great question. The whole platform is voluntary and a la carte. So you can pick and choose which features you want to turn on or off. The only thing we don't do is payroll. We intentionally don't want to do payroll. I have yet to find a client who likes their payroll company. So if you are that person, let me know and tell me who the payroll is. So we integrate with payroll companies. So we have integrations with Paychex, with Paylocity, with ADP, with PrimePay, with a lot of various others. But we also we don't charge for any of this technology, so it's free at the end of the day. But you can pick and choose which facets of it you want to use. And so a lot of people might turn off the recruiting or turn off the retirement or the e-verify. It's completely customizable, and that's part of that fact-finding process we like to walk through with clients to get to know what they're using today and how we can help complement that.
I've got a few more questions, but do you want to finish this slide? Because I just brought up this whole platform. Is there any more you want to add to that with what we have up on screen right now?
We're happy to do a demo. If we get down the process of delivering a proposal, we can show a demo one-on-one to any members who like to see more of it. I mean, the technology is super easy, super simple. It's all mobile optimized. It looks the exact same on your iPhone, your iPad, your Android device as it does on the computer. This is a screenshot of the actual dashboard that the employer would get. The only thing I'll highlight here on the left is when we listen to our clients. There's a reason we have 94% retention on small business. That's huge. The average is about 80% retention. So we have great satisfaction because we listen. A lot of our clients were telling us, hey, we got so many different things that we're doing. Again, we're the owner, we're the salesperson, service, finance, right? Marketer. When I log into the system, I just want you to tell me what to do. And so they'll have tasks. And so this is a task board. You log in, it's going to say, hey, you got to approve an I-9, or hey, Jane Doe had a life event, approve it. So anything that happens throughout the year, we're trying to make it easy for our clients to use. And so there'll be reminders and tasks that need to be done, as well as the right side of the screen. We try to make it easy for the employee. So it's a self-service portal throughout the year. Employees can log in, see their plan options that you're offering them, see how much the company is paying. Benefits as a part of total comp, it's benefits cost is increasing, and therefore it increases as a part of your total wages and total compensation. However, you'd be surprised at how many employees don't even know what their company is contributing towards their medical. And so, it's hugely important to make sure employees don't know that you as a company, if, for instance, you pay 70% of the premium, use a dollar amount. They're gonna start to look at that $300 a month or $400 a month as part of their total compensation. So there's transparency in that, and there's a portal where they can log in and actually see that, and they enroll and can update their information throughout the year. So both an employer administrative portal as well as the employee portal here.
And I love that because there's no surprises. I mean, this is, I think you'd agree with this, that one of the biggest challenges always for any benefits provider in that relationship is the communication piece of it. And this is just, you can go here and it's the employee as well as the employer have a real-time idea where they are with what's been spent, what's happened. I mean, information is power. This is right at your fingertips.
Yes, I mean, especially if you start to get into compliance. We've seen a lot of small employers who came to us that were just weren't getting the right guidance from their current broker or provider on compliance things that they needed to do, because they thought they were under 50 employees and they didn't need to do certain things, but you actually do. You got to capture your waivers. You're offering coverage. Make sure you get employees to sign a declination of coverage. Make sure you have a wrap document and you're doing things pre-tax. I mean, there's a checklist that we go through, and the technology helps to make sure that all of these clients are compliant throughout the year. And that's a big deal. We're seeing more and more DOL audits, more and more cases of people using paper and trying to track it down at the time of the audit versus trying to be proactive on the front end.
Yeah, smart. Another question too that comes up frequently is, so if I'm signing up for this and I've got my small business, if a captive is in my future, if that's really what the recommendation is going to be, how is my company selected to be a part of which captive? Captives are all about collective risk and all this. So how do I know what kind of a group I'm getting put in? Should I care about that, or how is that matched up?
Yeah, I should absolutely care about it. There's a lot of captives out there, guys. When we started doing research on captives about 1.5 years ago, we met with a lot of them. We talked to a lot of them. We developed a database of the differences between all of them. And every captive's different, whether it's domestic or whether it's situs in Bermuda or the Virgin Islands or Bahamas or wherever, right? The idea behind a captive is high level. As long as it runs well and it's been returning dividends back to its participants, has got a good track record of controlling claims costs and being transparent, a captive could be a right fit. but not every captive is created equally. And what I mean by that is um, a captive main thing is to aggregate employers together to bring aggregated discounts, right? But the way that they return money and their transparency around what pharmacy benefit manager they're using or what clinical team they're using, or what TPA they're using, or who's the reinsurer, right? Who actually is reinsuring the risk? All that's different. And so the captives that we work with have all been vetted. They're all an A+ rated paper. They all have a major reinsurer backing them, such as AXA or Nationwide. The captives that we work with return 100% of the pharmacy rebate back to the employer. So I mentioned that client that had $9,000 last quarter deposited in their bank account. That was 100% transparent and from the pharmacy benefit manager. And then there's also, how are they going about setting rates? And this is the other interesting thing. You don't want to join a captive just to get the rate jacked up the second year, because a captive is a long-term play. It's not the right fit for everyone, but it's a long-term play. Mm-hmm. The idea behind the long-term play is transparency. And so this might be one of the most important things about a captive that you're going to get versus fully insured. Fully insured, if you're under 100 enrolled employees, you're not going to get any data. And that's very problematic because you're not going to know what's driving your overall cost. So you can't put programs in place to control those costs long term. You're going to do the same old shell game of switching carrier year after year after year. A captive actually gives you the reporting and the transparency around what's driving your cost. It can be de-identified, it can be HIPAA protected, but us as your consultant can look at that data and say, hey, you have a 40% pharmacy problem. We need to go attack that right now, or your renewal is going to be bad, or maybe you had some really high utilizers of emergency room that they need to look at the urgent care, right? Or maybe you have diabetics that are getting supplies monthly. Maybe they should look at quarterly and look at a mail order program like Edison. So there's a lot of what I call population health management programs that you're able to then deploy in a captive that controls cost long term, a lot of times better long term than if you were just fully insured. The main key is the data. You don't have the transparency. The last thing in the captive is find out how they're paying the surplus. So if you can find out, how are they controlling cost, what's their historical trend of renewals look like, go see, what they're doing on their dividends. The whole idea around sharing risk in a captive is to create a captive layer, and then for the participants in the captive to earn dividends, or what they call claim surplus or profit sharing back. The captives that we're working with are averaging about 10% profit return from the captive. So you want to look at historical, profit return or dividends of the captive over the last, 5 to 10 years to make sure that they're returning and performing. These captives are incentivized to control costs well until they make money, but you as a participant should be getting money returned to you as long as the captive runs well. So those are, captives are great. We have captives down. You might think you're too small. Don't think that, because we have products that we can deploy right now for HFA for you as members that go down to 5 enrolled for captives. So you have at least 5 enrolled employees, and you can get a captive quote, and you'd be surprised at the cost savings in the captive. And so,
and the little read between the lines theme here that I want to make sure that you said that I think is the most important is that for our HFA members, and that's what we're here for, is that getting this through you, if that becomes a suggestion, if you guys have vetted these captives, we're not just throwing people loosely out here. They're gonna really get a good analysis of what they can expect. Is that fair to say? Because I think that's probably a protection that's so important to so many of our members.
Yep. And that's the idea. I mean, for us, we've vetted all the captives and decided on 2 or 3 that we go deep with and we trust and we have done due diligence on. Those are going to be the 2 or 3 that we provide if the captive is the right route. There could be other vendors and products that we put on a proposal that we recommend to clients. We're only going to recommend vendors in which we share the same values, and we believe they're going to do what they say they're going to do. Because I mean, if there are some vendors out there, Mark, and you probably know this, is there are vendors that like Christian Health Ministries plans who might try to enroll you, but then they aren't going to pay for pre-existing conditions. Or there's been some vendors like Medova or Lifestyle Health Plans that are in a DOL class action lawsuit right now because they're not paying claims in a timely manner. So carriers that we're working with have been fully vetted and we go through that every quarter, by the way, and do a carrier kind of stewardship report. So it is important, and that's what you will get. That's what HFA members will get as well. So.
And again, just to give people an idea, this is no what size employee team do I have, smallest to largest, that fits within these opportunities? What's the sweet spot here?
Yeah, we have products for everyone. Every size. You could be a sole proprietor, you could be an independent contractor, you could be a husband and wife member, and that's the only employees you have, or you could be 5 enrolled or more. It could be 100 enrolled, and we work with clients of thousands of enrolled. The idea is, when we were curating this marketplace, thanks to HFA and the leadership there, and the feedback from members is, there's a lot of diversity, just like in this country, a lot of diversity, and so we need to have products that fit members of all different sizes and shapes and types. And so the captives start at 5 enrolled employees or more. But even below 5, we have individual products. We have individual consumer health reimbursement arrangements. We have tons of different products that you can look to kind of fit that sub 5 enrolled group. But that 5 enrolled is really a good, not line in the sand mark, but a good, 5 plus has different options, and then 5 or less has a couple different options as well.
We have just literally a couple of minutes left. Any final thoughts, Tyler? I mean, you've done a really great job of laying this out, and thank you for fielding these questions that we've had as well. But any other final thoughts before we turn people loose on checking it out?
No, and I'll save my final thoughts for rather hear from the attendees and see what questions they might have.
Gotcha. I mean, we've really kind of covered a lot of the primary areas here. I think that we've just, I think really and truly, you talked about a time frame here. So it takes minutes to fill this out, to start the ball rolling. And you said roughly they'll hear back rather quickly. And again, the time frame you think between filling it out and getting some quotes, just general ballpark, would be what?
You'll get between the time you submit your information, 48 hours max. So 2 business days before someone reaches out, schedules a welcome intro call. And then from the time you actually submit the minimum required data that we need to produce a quote or proposal, it's typically about a week, about 5 business days, sometimes longer depending upon the carriers and the products, and if there's any missing information, but it's fairly quick. And you don't have to wait. That's the other thing. You don't have to wait until renewal. There's a falsehood out there, guys, that your health insurance, your group health insurance, is locked in for the year. No, that's not the case. So if you're January 1st, February 1st, March 1st, April 1st, or maybe you're June 1st and just went through your renewal, you do not have to wait 12 months. You don't have to wait until your renewal. You can switch at any time. So this is not like property and casualty or workers' comp or general liability or anything like that. You can switch month to month. So we, every month, every first of the month is an effective date to where we could potentially help you save money and help your employees. So
that's awesome. That's exciting stuff, and it's almost, I think you've almost made the case for there's no reason not to at least see and compare. That's just good. That's just good business regardless. But once again, this has been a conversation with Tyler Davis of Decisely, a solution partner of the association that has helped us launch the HFA Healthcare Solutions. And as he mentioned, if you go to myhfa.org/healthcare, you can, once you're there, you can just go ahead and fill out the initial application, if you will, and that starts the ball rolling. And in days, you will have some great insights onto just what the savings might be for your business. But Tyler, we're at the top of the hour. I really thank you so much for that, and thank you for the partnership with HFA. And again, any of you out there that have any questions, we're always available to you every day of the week at HFA. Please reach out. But to Tyler, again, thank you. And for everybody, I hope you try to sign up and check it out, because not only will you be able to perhaps provide better benefits for your staff and employees, but you might have some cost saving as well. Thanks so much. I'm Mark Schumacher. We appreciate you joining us today on this webinar.
I just want to say thanks, Mark. I just want to say one last thing, and thank you so much, HFA, for having me out here. It's been great to chat with you guys, and I would be remiss if I didn't say, something that my dad told me a lot growing up. which is, he used to quote Mark Twain a lot. And Mark Twain said, kindness is a language the blind can see and the deaf can hear. And so go out there and be kind, and help other people. And I just appreciate you guys letting me bend your ear for the last hour or so. So thank you very much.
Awesome. Tyler, appreciate that. Great way to end it. We appreciate it. We'll see you all guys soon.